Welcome to Talk Tickers. We dive deep into the latest earnings calls, pulling out the key stuff for you. Today, it's American Tower, AMT. We've got the call details here, and, well, we're going to break it all down.
Yeah, absolutely. And AMT kicked off 2025 pretty strong, actually. They came in ahead of their own initial forecasts on several fronts.
Oh, really? Like what?
Well, property revenue, adjusted EBITDA, and attributable AFO per share, all higher than expected.
Yeah.
And their core leasing growth, organic tenant billings, that was solid too, about 4.7% consolidated.
4.7%. Nice. So good start overall. Any particular bright spots?
Definitely. The U.S. services business, that had its best quarter in a while.
How long is a while?
Highest revenue and gross profit since 2021. So yeah, significant.
Wow. Okay.
And CoreSite, their data center arm, also showing really good growth. High single-digit revenue increase there.
Data centers are hot right now, seems like.
For sure. And they also managed to expand their cash-adjusted EBITDA margin to 68.2%.
So better efficiency too, not just growth. Did they make any big moves, sales, acquisitions, that kind of thing?
Yep. A couple of notable things. They closed the sale of their South African fiber business. Done deal there.
Okay, got that off the books.
And on the buy side, they picked up the GE1 data center in Denver, bolstering CoreSite, presumably.
Makes sense. Anything else? Dividends?
Yes. They resumed dividend per share growth, about 5% year-over-year increase.
All right. So strong quarter, some portfolio adjustments, dividend growth back. What about the outlook? Did this change their view for the full year?
They did nudge up the full year guidance for property revenue, adjusted EBITDA, attributable AFO.
Okay.
But, and this is important, they stressed it's solely due to updated foreign exchange assumptions.
FX tailwinds. So the underlying operational outlook hasn't really changed.
Exactly. Their core expectations for how the business itself will perform, that's largely unchanged.
Got it. So let's dig into that core performance then. What's driving the demand they're seeing? Leasing trends.
Yeah, they painted a picture of, well, pretty strong demand across the globe, really. In the U.S., the big carriers are still very active, lots of amendment activity.
Amendments meaning upgrades on existing towers, right?
Yeah.
For 5G.
Precisely. They're adding equipment, modifying leases. The goal is still to get most of that 5G gear up by the end of 2026.
And that activity is increasing.
Seems so. Q1 was the fifth quarter in a row they saw sequential increases in application volumes and services revenue that jumped over 140% year over year.
Well, 140%, that's huge. Shows that 5G build is still very much ongoing.
Absolutely. And it's not just the U.S. In Europe, they're seeing steady demand, too.
For what specifically?
Ground-based towers, rooftop sites. Carriers are working towards those mid-band population coverage goals and, the 2030 targets set out over there.
Okay. And emerging markets. Always a bit more volatile, perhaps.
Showing resilience is how they put it. Nigeria, for example, seems to have better pricing dynamics now, which helps carriers' cash flow and brings new business to AMT. And Brazil's benefiting from a stronger three-player market now. Those carriers are upgrading networks, focusing on spectral efficiency and coverage.
But they're keeping an eye on the risks. Economic stuff, FX again?
Oh, definitely. They mentioned they're closely monitoring the global economic backdrop and potential currency impacts, especially in those emerging markets.
Makes sense. Okay, let's circle back to CoreSite, the data centers. You said high single-digit growth. What's behind that?
Yeah, it's performing really well, driven by strong leasing, but also good pricing.
So demand and pricing power.
Exactly. And they've been adding capacity. Phases of their NY3 and CH2 centers came online, adding 11 megawatts.
And they filled it up quickly.
Very high day one leasing, apparently. Their focus is really on these high quality interconnection-rich sites.
Interconnection, meaning easy connections between different networks and clouds.
That's the idea. Like major hubs attracts diverse cloud providers, networks, enterprise customer. It's valuable.
And because it's doing well, they're putting more money into it.
Yeah, performance has exceeded their initial expectations, so they feel justified increasing the capital allocation to CoreSite.
Okay, that fits with their overall capital strategy, right? This grow, harvest, resolve thing.
Yeah, it slots right in, grow the promising parts like CoreSite in developed markets.
Hence the Denver data center purchase.
Right. Harvest value from stable assets and resolve or, sell off assets that don't fit the core strategy anymore.
Like the South African fiber.
Exactly. They want to hone the portfolio towards core markets and products, stuff with synergies and durable cash flows.
Sounds disciplined. Let's dive a bit more into the financials. You mentioned the 4.7% organic tenant billings growth.
Yep. Consolidated for Q1, building on solid trends from 2024.
And the U.S. services strength we talked about, highest number since 21.
Correct. Application growth was nearly 30% quarter over quarter and 60% year over year. Really strong momentum there.
Wow. And CoreSite, high single digits. We covered that. Margins expanded too.
Yeah, the cash-adjusted EBITDA margin grew nearly 70 basis points year over year, hitting 68.2%.
What helped that? Cost control.
Partly cost management, yeah. But also that big increase in the U.S. services gross margin helped pull it up.
Okay. What about AFO, attributable funds from operations? You said it declined slightly?
It did. AFO and AFO per share were down a bit year over year, but that was mainly because of some prior year benefits tied to their India business, which they've now largely exited.
Ah, so normalizing for India.
Normalizing for that, AFO growth was actually around 6.6% and per share was about 6%. So pretty healthy underlying growth.
Got it. And the full year outlook raise. Just remind us.
Raised property revenue by $50 million, adjusted EBITDA by $30 million, attributable AFO by $20 million, and AFO per share by 4 cents. But again,
Solely due to FX. Right.
their organic tenant billings growth outlook is reiterated, still expecting over 4.3% in the U.S. and Canada.
Which is over 5% if you exclude Sprint churn.
Correct. 5.3% excluding Sprint. Around 6% internationally and about 5% consolidated. So those core growth expectations hold.
And they still expect costs to come down. SG&A.
Yeah, they're sticking to their expectation for a year-over-year reduction in cash SG&A.
Okay, so looking ahead, capital allocation. Dividends you mentioned, around $3.2 billion planned.
Roughly, yeah. Subject to board approval, of course.
And CapEx, where's that going?
About $1.7 billion planned. That includes building around 2,250 new towers.
Still building new towers then.
Yep. And about $610 million earmarked specifically for data center development.
So a big chunk for CoreSite.
Definitely. The overall capital spend is actually increasing a bit, driven by opportunities they see in the U.S., Europe, and CoreSite, but they're pulling back a bit on investments in emerging markets.
Balancing act. And the balance sheet itself, how's that looking?
Looks strong. About $11.7 billion in liquidity. They highlighted low exposure to floating rate debt, only about 4%.
Yeah.
And net leverage is down slightly to 5.0x.
5.0x net leverage. Okay, let's talk specifics. U.S. carrier activity sounds like no surprises there.
Pretty much consistent with what they've been projecting. A steady pace for the 5G build-out continues. Both amendment activity and, interestingly, some early signs of demand for new sites, specifically for capacity.
So not just coverage, but adding density and capacity now?
Starting to see hints of that, yeah.
And the cost savings program, any more detail on where they're finding efficiencies?
It's pretty broad. They mention operations and maintenance, SG&A, supply chain, kind of across the board. No specific dollar targets shared yet, but management seems confident they can find savings by, leveraging best practices globally.
Makes sense. What about Canada? It's a smaller market for them.
Yeah, small, but they say it's performing well. They see synergies with the U.S. operations, but they also signal they'll be very disciplined on any deals up their terms, valuation, all that.
Okay. You mentioned amendments earlier. What about colocation new tenants coming onto existing towers? Is that mix changing?
They are seeing continued increases in colocation applications. So yeah, more carriers wanting space on the same towers.
Leading to growth in both amendments and new leases then.
Exactly. The overall mix hasn't shifted dramatically yet, but they do expect more colocation activity over the next few years as networks get denser.
How competitive is it to win those colocation deals? Are competitors fighting hard for tenants on nearby towers?
They suggest there isn't a huge amount of direct tower overlap. Their angle is to win by being the preferred partner, good service, quick deployment times.
So service matters.
Apparently so.
Right.
But they acknowledge competitive dynamics can vary, depending on the geography and what the carriers are trying to achieve.
Okay. One thing, the Q1 results looked really strong. If you just annualize them, they seem well above the full year guidance, even excluding FX. Why stick to the guidance?
Good question. Management pointed to potential variability throughout the year. Things like services revenue can fluctuate quarter to quarter.
Right. You mentioned that earlier.
Yeah. And cash taxes, maintenance, CapEx.
Yeah.
Those can also vary timing-wise. So they're essentially saying, great start, but let's not get ahead of ourselves just yet on the full year based on one quarter's outperformance.
Yeah.
Sticking to the plan, minus FX.
Fair enough. The services revenue, that big jump, what's actually driving that? Is it mostly engineering Site acquisition?
It's broad-based, actually. Site acquisition, engineering services, yes, but also a slightly larger chunk from construction management services in Q1.
Okay.
They did mention there can sometimes be a bit of a disconnect between when the service activity happens and when the related property revenue hits, especially with those big comprehensive agreements they have.
Speaking of agreements, what about EchoStar? Are they expecting payments?
The expectation is yes, based on the minimum contractual commitments they already have in their existing agreement.
Okay. Let's shift to Latin America, LAM. What's the picture there?
Pockets of increased activity, they said. Particularly Brazil, again, with the 5G upgrades.
But overall growth?
Expected to be low single digits for organic tenant billings over the next 3 years. There's still some churn working through the system, Oi, and previously Telefónica UM.
Right. Churn drags down the overall number. Any word on pricing? Escalators?
They anticipate the escalator, the annual price increase, to be around 5% in 2025, but that's, dependent on CPI inflation.
Makes sense.
Yeah.
And those comprehensive agreements you mentioned, are those becoming more common or?
They see them as a way to simplify the operational relationship, but they also said they're comfortable with both comprehensive deals and a la carte arrangements. Always talking to customers, focuses on what drives the best long-term value.
Flexible approach then. Last area, back to CoreSite one more time. What's driving that robust demand funnel they talked about?
It really comes back to that interconnection piece. Enterprises need access to multiple cloud on-ramps. They're increasingly using multi-cloud strategies.
So they need these central hubs.
Exactly, and CoreSite provides that. So they're seeing strong demand from existing customers expanding and new customers coming in, both cloud providers and enterprises.
And they're confident this demand is durable, even with economic uncertainty.
They seem pretty confident, yeah. They highlighted good growth and cross-connects those direct links within the data center and strong pricing continuing.
Okay, great overview. That covers the call pretty thoroughly, I think. Now let's shift gears slightly. Time for our This Is Not Financial Advice segment. Some, let's say, creative thinking based on the call. Your first outrageous but plausible idea.
All right. Idea number 1, leveraging that CoreSite strength. Given the focus on interconnection, low latency, cloud access, maybe look beyond just the data center REITs themselves.
Okay, where are you going with this?
Think about the companies providing the critical networking hardware, or maybe even specialized fiber connectivity between these major data hubs and out to the edge.
The enabler.
Exactly. The outrageous part is maybe the market is underestimating just how sustained the growth needs to be in this underlying infrastructure to support all the AI, cloud, and edge computing demand that's driving CoreSite's success. Could be a hidden derivative play.
Interesting angle. Playing the infrastructure behind the infrastructure. Just a reminder, folks, these are thought experiments, definitely not financial advice. Okay, second idea.
Second one, playing the emerging market angle, but cautiously. AMT mentioned improved pricing in Nigeria, a better market structure in Brazil.
Right, despite the overall slower LAM growth forecast.
Yeah. So the outrageous but plausible idea is a small speculative position in maybe a local telecom infrastructure provider, specifically operating in one of those markets like Nigeria or Brazil, if you can find one that's accessible.
Betting on the specific local improvement, not the whole region.
Precisely. The outrageous element is you're betting on continued stabilization and growth in these specific spots, even if broader emerging market sentiment remains volatile or negative. It's a targeted bet on a turnaround story AMT hinted at.
Very targeted. Again, highly speculative, not advice. Do your own research. Okay, that brings us to the end of our deep dive on American Tower's latest earnings. We've hit the results, the leasing trends, CoreSite's boom, capital plans, the outlook, and even a couple of wild ideas.
Yeah, covered a lot of ground. Strong start to the year, driven by U.S. services and data centers, even if the full-year outlook raise is mostly FX for now.
Hopefully this breakdown gave you some valuable insights into AMT's current state and direction. What stood out most to you listening in? Any questions that remain, definitely keep exploring on your own. Remember, making informed decisions is key. Join us next time on Talk Tickers for another deep dive.